The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Show like we usually do, taking a look at the FTSE. As you can see, it's been in a strong consolidation pattern at a very high level with a few ABCDs, and then also we took a look at, that was the first one was the DAX, the second was the FTSE. You see the FTSE did make another high here on this 4-hour chart, and it was down a little bit today, but it's still in a rallying mode, but it's completed a 3-drive pattern and that potential double top. This next segment, folks, I don't know how to do it, but I've been asked to talk from two different people about what I see going on with the COVID virus, and I'm about the least person in the world to talk about this. All I know is numbers, so I'm just going to bring this up to you quickly. It's only going to take about a minute. This is right out of Wikipedia. It shows that there's been a total of 2.94 million deaths. When you draw that in, you just draw a line under it and put in 7.3 billion, and you see that that's a very, very small percentage of people have died. But look, you'll see here in the United States, we've had 562,000 deaths out of, we have 333 million people in there, but 31 million were infected. So, but look at India. They've only had 170,000 deaths, and they have 1.3 billion people. And China's not even listed on here. So I don't know anything about it. All I know is, folks, it's wide open city here in Tucson, Arizona. The casinos are rocking and rolling. The poker games are back. I didn't play, but the poker games are back, and no more masks, no more gloves, just regular old poker with the old boys playing. They think everybody being vaccinated, and I think most of the old people are, but we'll see what happens with it down the road. But this was a pandemic of a very small proportion. Supposedly, it's not over. We don't know what's happening. Let's get back to the markets, which I knew a little bit about, but we need to watch it very, very closely. Okay, let's take a quick look here at crude oil. Mr. Z asked us to take a look at this, and I wanted to bring it up here about this trading range that we have going on in crude oil. You'll notice here we've had 3 higher bottoms in here today. We had a high, you can see the top here, we made a perfect ABCD up there at 60.70. We immediately broke $1,000 down to 99.76. We now have a 135 pattern on the bottom. As long as it can hold 58.80, it is in an uptrend. Below 58.80, you can't really call it as an uptrend. So you've got to pay close attention to this here because it's a very, very important low at 58.80. Below that, you're looking at prices of around $51, $52 a barrel. In my opinion, and folks, when I was asked to talk about that, I really didn't want to spend any time with it because I know very little about it. I really do. All I did was look at the numbers, and there's so many variables. It's just amazing. When we went through our vaccinations here a couple of weeks ago, there was long lines. It was a drive-through there at the University of Arizona. There were probably 200 people, giving everything out, and it was very, very professional and everything. But I don't know anything about it other than that. All I know is you're not going to be able to travel much unless you get vaccinated. That's from what I'm understanding. But even then, we haven't traveled in 15 months, and I'm not even sure how that goes. So that's it. Anyway, you can stop and think how many people in Hong Kong. I think they've had only like 25 deaths in Hong Kong out of 7.7 million, so they weren't affected too badly. Whether the masks work or not, it's a coin toss, folks. I don't know if they do or not, but, I don't know if anybody else does either. All right, let's get back to the markets. And since we're talking about a market that I know least about, we might as well talk here about Bitcoin, folks, because we are broke above the 60,000 level today. The next ABCD on this, which is that three drive pattern, takes you to 67,000 in Bitcoin. So I'm just looking at the cryptos as they say it. Now, China came out today and said they were going to have their own cryptocurrency. And is going to be a factor in the market, I don't know, but the market's strong regardless. We're up today in the Dow. Well, we're just about squarely even in most of these things. The Nasdaq's down a bit. The S&P is up just a tad, and I believe the Dow Jones is up a little. The Russell is down just a little bit, but it's still relatively early. We still believe that we're in some type of a major pattern up in here on some of these things, and I'll bring up the one that looks the most interesting here. Let me get it up here so we can see it very, very quickly. Oh, dear, it is. Here we go, right here. Is this it? Nope, that's not it. Hold it. This is the one I want to show you. Last Monday, I talked on a show about the E-mini S&P making corrections, and I want to get this chart up. This was Friday, a week ago Friday. We had that jobs report, blew everything out of the water. We got up to 20 or something, and then on Monday, Tuesday, Wednesday, Thursday, and Friday, each one of those days, folks, we had somewhere between 18 and 20-point corrections. And you'll notice here, this was done over the weekend. It was done on Thursday before Friday. But if you notice, the high was forecast at 4120, which is the 1.6183 drive. The high on that S&P on Friday was 4122. Now, in that big run-up that we had on Friday, the open interest dropped in every single stock index future. The S&P, the Russell, the Nasdaq, and the Dow Jones all had declining open interest. That is short covering. But short covering can last a week, 2 weeks, 2 months. You don't know. But we do have patterns up in here that are indicative of something, very, very important happening. Whether they're going to happen or not, I don't know, but, I'm just looking at patterns. That's all I'm doing, trying to find a risk thing. Now, had another question today is about the gold. We believe that high that we made at 1759.10 on Friday is a top of an ABCD pattern, and it's very important. We're trading at 1730 right now, I believe. And if we should get above that 1760 level, that's going to be a monster breakout, folks. That's be one of the times where I think the old cowboy's going to have to put on the saddle and tighten up the stirrups and buy a breakout, because that's going to be a really powerful signal, because that would be breaking through the 382, and it would be breaking a 382 on the daily. I mean, that would really be a very, very powerful signal on the upside, but that hasn't happened. We still have the probability of getting gold down to below 1700 one more time, hopefully around that 1705, 1695 is what our assumption is going to be. By the way, we have Norm Winski is going to be our guest today. Tomorrow, time permitting, and it's going to be tough, is we're going to have Simon Lee of Farm Bureau is going to be on. Wednesday, we have Shane Smolian, and Thursday, we have Adrian Togaray. And so we'll have some good guests in here as we go through. So remind ourselves that, these markets, you have to use stop protection, folks, because anything can happen, and it usually does. Just to give you an idea of some of the things that are on the internet, I wanted to bring this up here. People were showing this, what the corrections were here in these markets, going back to, you'll see they're showing the S&P 500 PE ratios, and you look back here where it says 1930. Folks, the E-mini or the S&P didn't come out until 1957. So they're using data that is not related to the S&P 500, because that didn't start until 1957. That's one of the things that you have to realize, that when you're dealing with their data can be funny. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I want to remind you folks that on Thursday, Basil's going to have a show from 4 to 5:30 p.m. On all of his material that he does and the market stuff. And I really suggest that you go to TFNN and sign up for it because it's very, very informative. He's a master at what he does. Now, I've posted a chart here of May soybeans. We talked about this last week. We also talked about it during the report. You remember the report came out on May 31st. We have another report that came out on Friday that was not as good as everybody thought, but you'll notice the soybeans went from $13.65 a bushel to $14.55 a bushel. That was 90 cents, $4,500. And folks, we are now down below the level of the first report that was supposedly be really bullish. But we'll look at the chart closely, folks. From April the 30th, we went straight up, and then we came straight down and stopped at a 61% retracement. From that level, we made a very nice little A, B, C, D pattern over the next 3 days, exactly at a 50% retracement, a perfect A, B, C, D to the penny at 14.33. And from 14.33, we've gone all the way down to 13.80 today, and that completes the A, B, C, D of that larger move. So we are running into really strong support here in the soybeans at around this 13.65 to 13.75 based on the chart. Now, this could change easily, but remember, this is old crop soybeans. These are the ones they're using right now. This is not new crop. New crop is a totally different animal. We'll cover that at another time. But the reason why I'm bringing you this up is for two reasons. One is how to handle the news, because they can feed you all the stuff in the world that they can to tell you to make a bad decision. But the one thing they can't do, folks, is hide from you. If there's more selling, the prices are going down. If there's more buying, prices are going up. It's that simple. And just remind yourself that. Why are prices going down when the market is got very, very bullish news? Well, they maybe have discounted it in advance, or maybe the news is not correct. We don't know. I mean, half the stuff on the COVID out there is, I believe is probably fake, but I don't know that either. I'm just guessing. just like just about everybody else. But the one thing you can't guess about is what that bar chart's telling you. That bar chart's telling you, where the money is. That's there are people who follow the money. Remember Woodward and Bernstein and with the Nixon tapes and stuff. What was the name of that movie? I can't even remember. All the President's Men. Anyway, that's the main reason is to watch this and watch how the market reacts. If you have really bad news and the market goes up, that's good news. That means the market is just done going down. And the same thing if you got really good news and the market can't go up, the market's done going up. So just keep in mind those things. Okay. Let's just a minute. Bo is saying, if not mistaken, last week we spoke of open interest rising, the market surging higher. All I know is what happened on Friday, Bo. Friday, we had a big drop in open interest, not big, but a substantial drop in open interest in all four indices when the market went straight up. That is short covering. There's no other way to define that. Because you got people buying and contracts dropping, that means that shorts are leaving the market, and that's what it's all about. So that's all I can tell you. Longer term, I don't know if it means that much, but I was just watching what happened in Friday because we had that vertical move on Friday, based on where the market went from 4104 to 4122 with basically out a downtick. It went straight up. I mean, that was, bids following bids, and that's pretty much what happened with that. Now, I wanted to have one other request here to take a look at lumber. We haven't looked at lumber since Hector was a pup, and that dog is, I think, 13 years old now, so it's been a very long time. Here is the price of lumber, and those of you that are doing any remodeling in your house or anything, you can see the price of lumber since early 2000 has quadrupled. Well, it's quadrupled in price. It's now $1,200 a square foot. Per board foot, and you can see here we are forming a three drive to a top pattern here in the lumber. So someday around 1,200 to 1,300 to 1,400 per square foot, we're probably going to be topping here in lumber. But lumber is a commercial trade. I don't even think most commodity firms don't even allow the people to even trade lumber. I'm not even sure. It used to be that way, but the big lumber guy in California was Roy Fassel. He did most of the business for the western part of the United States, and he's still working at 84, doing everything out of his home. But that's pretty much it's still traded. There's no question about it. But I don't know if they allow you to trade it because of the delivery stuff and the vacuums that you can have in that market. But it has increased quite a bit. The other thing is try to find someone to do some work on your house, like yard work or something like that. I mean, it's impossible. I mean, it's 3 and 4 months wait here to just try to put some, a few little doors up or something like that. I mean, the tradesmen here in Tucson are just loaded up. I mean, they just don't have any time to do it. And they tell me that everybody's staying home and they want to get their work done. So who knows? Well, hopefully the thing is over. That's my fondest wish that's what really happens. Now, we have another chart here from our friend Rich Anderson that I think was quite interesting here, and it shows here how households are putting equity into the market. And you'll notice here from the 1960s, that was the go-go years. Boy, can you believe that? That's when I was first started trading. And then we had the debacle into the low of August of 1980. Then we had the dot-com bubble at 2000. And then we had the where is the dot-com bubble? Where was the household bubble one? Oh, that was a little tiny one. You don't even show that. That was it. It went from 28 to 16. But look, they're putting. What this is telling you is people are putting a lot of equity into the stock market is what it means. I heard a figure the other day that someone said that in the last 5 months there's been more money put into the stock market in the total of the last 10 years. I cannot believe that figure, but I'm checking on it, and I don't think it's correct because that just doesn't make any sense to me, not with the evolution of all the ETFs and all the stuff that's been going on in the market being extremely bullish, since 2016, 2017. So that's my 2 cents worth of what we're looking at here. Okay, now we're going to have Norm Winski as our guest here coming up. Treat him nicely, as we always do. And I had one other chart that I wanted to show you, and that's our good friend, Mr. Appel. And we'll get Apple up here. you'll see that Apple did make the 61% retracement up here at 133 and change. That's a beautiful ABCD pattern. You see the 382 held it there at 128, and we went down to 118, stopped right at the 78% level, and then we went right up to the 61% retracement there at 133 and change. So this is going to be interesting to see if Apple can go blasting through here. But remember, it's a market of stocks, not a stock market. And in the NASDAQ, you're looking at about 10 stocks that make that NASDAQ rock and roll. So if one of them gets moving, it can really, really change the movement of the market. So I think it's important to realize that you've got to realize when you're trading these markets with the NASDAQ specifically is the fact that you're looking at something that doesn't have, too many stocks involved in it. There's basically 20 stocks run that whole NASDAQ 100. So that's another one. Finally, the last one I wanted to show you is the relationship of earnings. We'll put this up. We'll have Norm Winski right back, folks.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, without further ado, I'd like to welcome Norm Winski from Astro Trends, Naples, Florida. Norm, you're in the house and you have the mic.
Thank you very much, Larry. Thanks for having me on.
It's our
Okay,
pleasure.
hopefully everybody can see my notes. I'd recommend you take a screenshot of the notes here at the top of the page, and so you can follow along. We don't have a lot of stuff to look at, so it shouldn't take too long. So I'm going to go back to when I was I think I was last on your show on Friday the 26th of March. Going into the weekend there, we had a full moon in the sign of Libra, and we round up the usual suspects for your full moon, new moons, financials, grains, precious metals, and then because it's in Libra, they told us that we should look also at sugar and wheat in particular, although the wheat is covered under the grain category, obviously. We also had an indication for the U.S. natal chart. For you that don't know, we take a snapshot of where the planets were when our country was founded on July the 4th, 1776, and Jupiter was 150 degrees to where Neptune was on that day. And that's good. Anytime you have the U.S. chart, we look at the U.S. financials, which are U.S. stocks, T-bonds, U.S. dollar, and because it was to Neptune, we're also going to take a look at oil. Then it was pretty quiet that following week until we got to the, we had the holiday there on Friday, April 2. And so we'll be looking over that weekend when we had Uranus line up with Jupiter line up with Uranus. Jupiter's in Aquarius. Uranus was in Taurus, the bull. And we'll be looking at cattle, copper, cotton, and stocks. So here's our first chart. We'll see whether what worked, what didn't work. And my mouse just went to sleep. Okay, there we go. All right, and the cattle was stampeding higher, and there you see was our window there over the April 1 weekend, and you can see that did not work so well. It kept going higher, so that was a miss. That's a red arrow was a miss. A green arrow was good. Cotton was going down, down, down. Made a low over here, popped up, made a retest low there, right into our window, and so that was potentially a good buy. And then you went up and you could have made some money. Copper did sort of the same thing. It made a low there near our window, and you just missed the low there by that one day. And the next morning you could have bought, and you would have made some nice money. That's I think about 12-cent move there. In copper, it's about $3,000 in about a day. That was a huge move there in copper in one day. Here's your crude oil. You were just talking about the crude oil there, Larry, I think. And we were one day early and not too far from the high, so that was a good one there on the sell that you saw on the opening there based on our over the weekend indication. And you were pretty close to that top. Gold is kind of going sideways there. I don't do sideways. That's Newton's law. For reaction, there's an opposite equal reaction, and if it's going sideways, you don't know what the reaction is going to be. You don't know if that's a high or low or whatever, so I just take a pass. That's a yellow bar. It's a pass. There's a silver, same thing. You see that? Here's sugar. We were close, but no cigar. Sugar went down, 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 and passed us by, and it went lower still for another day or two, and so that's a miss. Here's your corn was going sideways, so we do nothing there. And there's your soybeans. We missed on the beans. That kept going lower to maybe that crop report that came out, what was the 30th, 31st, might have skewed the players' activity on that, but we can't worry about that, as you often say, Larry. And here we go. Here's the wheat, and it was going pretty much sideways, so we don't do anything there. Here's your S&P. We did have a bit of a short-term top there with over our 26 weekend, and there you go. So we did pull back about 50 handles, if you remember, Larry, right into the next day or two, and then we rallied. My next window was the April 1 weekend, and that did not work as well, so that's a miss. And here's your T-bonds. T-bonds work nicely in that you had the moon and the U.S. chart indication, and it bottomed the next day. We were one day early there. There's the dollars going pretty much sideways with both of those same indications. Here's your Aussie dollar popped up into the moon and then pulled back, so you had a chance to make some money there on your Aussie dollar. Here's the British pound, chappie. Cheerio. And we same sort of thing there as the Aussie dollar. And here's your euro going sideways, so we passed on that. And there's the yen, and we went, that's a miss because it kept going lower. Got to be right within 1 day, or I count it as a miss. We had, out of 14 of those green or reds, we had 9 winners, 5 misses for 64.29%. And here's my version of the Bradley model. I've changed it a whole lot since 50 years ago when I first ran across Bradley's book. And if you try to go run the standard Bradley model, you won't get what I got. And I think mine's a little bit better. I did this back in the blue line in February. You can see it across the chart there. This is for March, and starting March 1 through April 1. And I drew the blue line in advance, and then I overlaid the S&P 10-minute bars on top of that. And you can see that worked pretty well. And I talked about this previously about my inversion theory, how I can able to forecast when the planetary energy is going to invert based on things like there's Mercury at 0 south latitude. I had that as a low, and then the energy would invert and turn from negative to positive, and that's pretty much what happened. So that kind of thing. You see, so that was pretty good, I think. All right, looking ahead here now, as of Friday, the 9th weekend, which we just passed, with a Sunday, we had a new moon, and so we had a couple indications here for changes in trend for over the weekend, and then it's pretty quiet this week until the end of the week. We have something to the U.S. chart. At the end of the week, we have Neptune lining up with the U.S. Neptune for U.S. stocks, T-bonds, dollar, and oil. And at the end of the week, we have Saturn to the U.S. chart again, to the U.S. Mercury. So let's talk about right now. We want to find markets that are at an extreme into the new moon. I would say the S&P would qualify for that, going to a new time a new all-time high. And one of the interesting areas there that we got to on Friday is that if you were to take the high of 2007, that was the retest of the 2000 dot-com bubble top. When the S&P got to the high that on 2007 was 1576.09, I think was the price, high on the October 11th, 2007. If you multiply that times 2.618, which is your golden ratio, 1.618 squared, you'll get 4126. Hold on, I got it here on my calculator, I think. Oh, it went away. All right, well, let's see. Anyway, it's 4126 and change, I think, I might be off by a penny, 4126.25. And we got to about 4129. It went through that by almost about 3 handles, and then we closed at 4128. And so if we can't get through this level here, we might be. I don't know what we're doing right this minute. A little while ago, most of today we were just going sideways after backing off overnight.
We're right at the highs now, Norm. We're at 41.21.
All right. Well, we're sneaking
let's pay a few bills, and we'll be right back with Norm Winski. We've got a couple questions for you, Norm.
Okay. Selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets, Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks. Norm, we have a couple questions for you, if you don't mind.
Okay.
One of our listeners is asking...
Can I just jump in with one quick comment?
Yes, sir.
I wanted to follow up on your soybeans there. You talked about how the soybeans have been coming down. And guess what? We're at a new moon. So I agree with you that this is a window when you ought to be looking for a low in the beans, okay?
That sounds good. That's what I'll be looking for today. Now, the question that someone's asking is, you talked about the 9 out of 14 things. That when you talk about the exact time, are you looking at intraday or are you looking at a daily? When you
that's based on a daily chart, and I got to be right within a day.
Within
or
a
it's
day.
wrong.
Okay. Now, how about if that day happens to be, like a really big day, like you get the signal on the 14th and the 15th, the market moves like $1,000 or something. How do you handle that?
Well, if it moves too much, then I'm going to count it wrong.
Okay. And what do you use as a...
It wouldn't be a reasonable risk. The whole underlying theme of this is, did you have a chance to make some money? And if the answer is yes, then it's a winner. And if the answer is no, then it's a loser.
Okay, the next question is, what is a reasonable risk in the Winski household?
I'm sorry?
What is a reasonable risk in the Winski household?
That's different from each market, right? You have to look at, what kind of, obviously $1,000 in corn is a lot different than $1,000 in say crude oil, right? It's not the same,
Amen.
Right?
Amen. Point well taken. Yeah. The next question that we have is from Saskatchewan, Canada, and that question is, what do you mean when you talk about the retrograde motions of some of these planetary things that we're looking at, how it affects the Bradley model?
All right. Well, maybe I should talk about what retrograde is. Due to the relative motion of the Earth, the other planets, it appears, that's the key, and Einstein would tell you that that's important, how what our relative position is to the other planets, other bodies, that if you were to go out and plot the planets in the night sky every night, you would notice that occasionally it looks like a planet stopped its motion and then reversed its direction. Just like when you're driving on the highway and say you're doing 60, and then you look out and it says, Larry, you're doing 60 on your pedometer. And then you look out your side window and all of a sudden you get the impression that you're going backwards because somebody passes you. That's what happens with the planet. So you get the impression here on Earth that we pass a planet or they pass us, and it looks like they stop the motion and reverse direction. That's called a station point, when it looks like it's stopped its motion, and that's a momentary thing. And then it reverses engines, and then it goes from stop to go direct, forward, or stop to go retrograde, which is backwards. And this tends to be a point not only for a change of trend point, but can often change the indicated what had been the energy of that planet. So let's say your standard Bradley model has the month going down in a 45-degree angle all month, but you get to a station point, and then all of a sudden the energy inverts, and now that negative energy turns positive. Then you're going to start going up at a 45-degree angle, you see?
That makes very good sense. Another question to sequel to that from Saskatchewan is, are certain planets more prevalent in calling market turns during retrograde? He's referring to Venus and Mercury.
Well, the stock market is the big basket of everything, so it responds to all the planets, and the different commodities only respond to particular, one or two particular planets and signs.
So like the grains do the lunar things quite a bit.
Yeah, the grains are all about Mercury and the moon for the shorter term cycles.
Okay.
Right.
All right. What? Now, Norm, you have a class about teaching this, and I believe it's well priced, as I recall. It's free. Is that correct?
Well, there's a day trading class that's potentially free, and if you mention Larry's name, I'll give you a 20% discount.
Off the free. This is very good. Well, you're a generous
20%
fellow.
off of free. and Larry, it comes with a money back guarantee.
You used to be double the money back guarantee. You've changed
all
that
right.
over the years, huh? Okay.
All right. Larry. I'll give your people double your money back. Okay.
Hey, how will the people reach you, Norm?
Oh, that's a great question, Larry. You're a genius. There you go.
Yes, I am. In my own mind.
I'm here in sunny Naples, Florida, and 239-594-3939. You can talk to the Norm. You don't have to talk to a website or some robot, and it's me. You get to talk to me. I got, 50 years, not quite up in Larry's league yet at the 60-year mark, but, I got about 50 years of looking at this stuff. And there's my email, Ann Winski at Embark. That's a Q in the middle there, not a G. Best if you can copy and paste that somehow. .com. And then you can call me on Skype at Ann Winski, NWINSKI_1. So looking forward to hearing from some of your folks and helping some of your folks there, Larry.
Okay. Norm, I have one other question. That is, do you look at any cryptocurrencies?
No.
Okay, that's clear enough. Thank you very much.
I mean, you can't help but look at it from just out of curiosity myself. But I believe, I don't know, maybe I think it's the greatest Ponzi scheme in financial history. That's what I think.
All right. Well, everybody has an opinion, and they usually count. That's for sure. Hey, listen, we want to thank.
Like you, Larry, I don't plan on trading that stuff. You watch it for the the market psychology, what's going on there, and so forth. Because it's interesting that's kind of crazy what's going on there, So.
Yeah, Norm, we've got you scheduled on Friday, the 23rd of April. Is that correct?
That's fantastic, and because I don't want to give it away, but something really big is scheduled for right after that weekend.
Okay, well, that's great.
I think that might be a super window there, right around the 26th, 27th of the month. Okay.
All right. Well, listen, thanks for joining us, my friend, and we will have you on the 23rd of April at 12:30.
You almost reverted back.
I forget about the skip of the time. Yeah, that's for sure.
Feeding time there,
All right. Thanks, Norm. We appreciate it, buddy.
You bet. Thanks a lot. Bye.
Okay, Norm Winski, folks, always we made a new high on the S&P from Friday, folks. We made a new high by 1/4 cent. We did get as high as 41.22 1/4. The high on Friday was 41.22. So it's a valid breakout with that quarter cent bust out to the upside. Now, I wanted to bring one other chart to your attention. I covered the Apple. I think that was very, very important. But this one I want to bring up to you is that S&P, because we're back there again. And I want you to see where we are here because we are at a really critical level, folks. This was done Thursday. You can see there April 9th, and then, well, that was before the close on Friday. But you'll notice here we got up to that 41.20. That's that big number right up there. You'll notice that the red time frames that's from time high to time high. That's due to come in today, and we're at that level. So we could get as high as 41.30. There's no question about it, but we do have a 3 drive to a top pattern on this, on the daily and also on the 4-hour chart. And this happens to be a 30-minute, but the sequence is there, and no correction has been more than 18 or 20 points for the last 6 days. I mean, that in itself is unusual. Hey, we'll be right back. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, I've saved the best for last. I want you to see this chart of Google. If you remember, about a month ago, I talked about that red square, that when that market gapped beyond that red square, it was going to be a heck of a move. Of course, I was expecting it was going to be to the downside. Well, guess what? I get a phone call on Saturday morning. I'm sitting here doing my charts, and it was from a young man out in the East Coast, and he said, thank you very much for the buy signal in Google. And I said, what in the world are you talking about? And he said, well, you said to buy it if it gaps above that red box. And the old high was at 2150, and it gapped at 2152. And I bought some options there. And he said, I made a lot of money. And as you can see, for 5 straight days, it went from 2150 to 2285. Folks, if that's one of my recommendations, we're in big trouble, because that is a very rare pattern. It worked, and probably worked for maybe those reasons, but frankly, that is not what I was expecting. I just wanted to let you know that that's what's happened. It reminds me of a story when I was doing the Astro cycles way back in 1989. I had 88 and 89, I had a recording message, and I would leave a recorded message, and one day I said, if the soybeans close above, I think it was 8.55 a bushel, I said they're probably going to go limit up a couple of days, and they closed like at 8.58, and they did go limit up 3 days, the next 3 days in a row. And Gene Siebenthal from Iowa, a nice old farm boy, he sent me a case of Dom Perignon, 12 bottles at $100 a bottle. And that lasted me a long time. I think I got it on Monday, and I was finished with it on Saturday. No, it's anyway. It was just one of those things that, hey, I don't know, but that was a valid signal, I guess. But frankly, I never would have I never would. I don't even trade Google, but that just shows you the technical nature of that box. That's very, very important. How high it's going to go, have no clue. But it did gap right above it. The old high was at 2151. The low that day was 2152, and away it went. It never backed off. I mean, I think it had one tiny. It didn't have any down days. It had, yeah, okay. Hey, we'll see you all tomorrow, folks. Our guest will hopefully be Simon. May God bless.